What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is April 1st of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to answer the ultimate question on everyone's mind when it comes to Bitcoin and crypto. When can we expect a cycle top? And more importantly, try and answer the question of how much further do we have to go in this run-up? We've obviously seen a lot of optimism in 2023 and the start of 2024, but I want to spend some time to not only talk maybe about some timeframes, but more importantly, really how far we can go, setting realistic expectations when we factor in data science models, price analysis, and more importantly, following the signs that price gives us to let us know when things are starting to wean off. We've got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. Now, I want to start by clarifying one thing, guys. I'm not here to make a negative video here today. In fact, I'm going to be talking about prices likely expanding here. Price action has remained strong. We are barely spending any time below the 21-day moving average. All the right signs are showcasing here. And as we've approached previous all-time highs, price has not faced too much harsh sell-side pressure. Anytime we have, it's been bought up here. And as we talked about since back in kind of mid-late February, as we were getting up into the $60,000, $65,000 range, we emphasized this point that really, once you get up into this range here, it's very difficult to deny that this thing has got room to expand further, right? And I say that again as someone who was relatively bearish back in the earlier parts of 2023. As we started to change course and started to get more bullish on altcoins and Bitcoin in October 2023, since then, we've continued to see expansion here within price. And while we remain cautious, as we get closer and closer to these highs here, this is something where we can get a clear picture about where things can really start to continue from here on out. And we start really setting expectations for where a cycle top can play. So I want to go ahead and talk about some of that here. The first thing I want to bring into the picture here, which I don't see enough people talking about, is really the topic of global liquidity. Now, we've talked in this channel about global liquidity for a long period of time. I don't want to stalemate a position on where Bitcoin is going to be heading due to global liquidity. There are other dynamics here, like the ETF and other things that we will discuss in this video. Not to mention Bitcoin, as some people say, is the honey badger of markets. It doesn't care, it does its own thing. It doesn't follow the broad trend all the time, which I tend to disagree with a little bit. You can see a pretty strong correlation with the performance of equities and other risk-on assets. But put that aside here, right? I just want to go ahead and talk about the importance of liquidity, because we cannot sit here, and as we've talked about before on the channel, we cannot sit here and say that global liquidity benefits Bitcoin when it expands, but when it's stalling or going down, that it's not something it's just something simply we can ignore when Bitcoin is ascending in price. I think that that's a really negative and arrogant take, because you can't have it both ways, essentially, where you want it to be a good thing and then you can just simply brush it off in the event that it's not continuing to go up alongside Bitcoin's price. So what I mean by this here is that when I take a look at global liquidity here, this is a measurement, a broad measurement, a custom one that measures the broad money supply across all the major central banks and global currencies across the world. And as we can see here, generally speaking, global liquidity has not been contracting like a lot of other measurements of global liquidity have probably stated. One thing I've leaned more towards here is this measurement, which is measuring the broad M2 or money supply across the world. And what we can see here is that as central banks have tightened over the past year or two, back in 2022 and 2023, what we do see here is that generally speaking, M2 has still expanded. While central bank balance sheets have contracted, still the broad expansion of credit and money in the system has still remained vigilant here. And there have been some central banks or governments like China that have been able to keep this relatively strong and afloat. And as you all know, as we've talked about, liquidity floats wherever it needs to go. Right? Liquidity finds a way, money moves like water, it's going to go to where it needs to go. And essentially speaking, the main point here is that assets are going to track liquidity. Well, what we can see is since back in October, right, during this period of time where crypto's really started to make its big move from the 30K range in the case of Bitcoin and altcoins, easily going up 100% or more in market cap, we can see that global liquidity expanded about 5% here. Right? There's no sheer, just oh, coincidence here. No, there's a clear correlation. When liquidity is expanding here, we see risk on assets being able to improve. This was the same case here for a lot of the technology stocks in October 2022. That's when a lot of them started to bottom, and we had a great year in equities back here. And as we set in a higher low in M2, this allowed for the confidence of more risk on assets like Bitcoin and altcoins to continue expanding. At least from my perspective here, you may agree to disagree. Other people might view it different. I think, as we all know, when you go towards the more risk on assets, when you go from real estate to equities, or I would say in this case, go from kind of bonds or treasuries to real estate to equities to Bitcoin to altcoins to NFTs and all types of different random speculative instruments in the crypto space. That's kind of the ladder here. And the more excess liquidity you have in the system, the more you have signs the liquidity is going to expand, the better off those assets are going to perform. And I don't want to keep rambling about this. I want to move on to the next point here. But the big thing I want to signify here is the trend of liquidity. As we can see here, liquidity has not really maintained a significant uptrend, and it is far away from its healthier long-term uptrend of expansion since 2008. So I want to emphasize here that we are still well elevated above where we should be historically speaking. But the big thing here I want you guys to note is to watch for this green line to break or for this red line to break. That is going to be really kind of the ultimate gauge for me to determine whether or not, we've got the ability for Bitcoin to keep expanding. If there's going to be massive monetary debasement or a lot of money printing, where central banks kind of ignore inflation and have to essentially print their way out of fiscal deficits, then in that case, you're going to see a breakthrough on this green line. And that's going to be your sign to, again, like 2021, like back in 2017, go out the wazoo, speculate on altcoins, make big bets where people aren't willing to. And that would be, again, where the crazy party continues. If we, however, stall here, like we kind of have since back here in February 2022, and there's no real new expansion, and we start to see potential weakness down here towards this red line, that could send some warning signals. And I want to try to visualize this a little bit in closing on this topic, because I know a lot of people believe, in this case, that Bitcoin, there's unlimited liquidity out there. There's only 21 million Bitcoin, and therefore Bitcoin needs to go to $1 million. And people are setting at all these crazy price targets. But I want to bring it back into the picture of liquidity. And I think this is going to make it a lot clearer for people to understand really how much Bitcoin really has expanded against the money supply, right? So take a look here, for example, back here in the bull market peak of 2017. Now, I want you guys to keep in mind, this was, coming up here. We're in 2024 now, but this has been well over 6 years here, 6 to 7 years, right? Of price action, where we are now, okay? And I want you to take a look here at the peak in April 2021. Now, from that period of time, Bitcoin expanded from 20K to around 65K around that time, give or take, right? But in a monetary debasement adjustment, right, this was a 141% increase in price, right? Not too incredibly far off for the previous all-time highs, like just nominal measurement, right? But generally speaking, a 141% expansion. That's a little bit over a doubling in the valuation, 2.5x, roughly speaking, for Bitcoin, okay? And that was when we had massive printing of money. Now, sure, we didn't have the on-ramps of the ETFs, and that's what I'm going to kind of get to here. But I think, realistic expectations would put us, doing something maybe similar to what we did in the past, maybe a 140 or 150% move now with the ETF on-ramp. And realistically, in that kind of optimistic scenario, that prints Bitcoin at a price range, and we're currently running around 70K, somewhere in that ballpark of around $160,000, $170,000 Bitcoin. So again, that would be a great figure to go to, but that's kind of the optimistic scenario here. I think that's something that's realistic to achieve now that you've got the ETF inflows, you got that potential institutional mania around Bitcoin. That's kind of the best case scenario here. I would say for those who are telling you that, there's obviously always a scenario here where Bitcoin could take over the world, dollar goes to zero, other fiat currencies collapse. But I got to tell you guys, that's a really doomsday scenario. All right, and the dollar, for those who are very big on the BRICS narrative, how the dollar is losing value, the Dixie or dollar index is holding up great against other foreign currencies. So you don't need me to tell you that. You can take a look at how Forex markets are valuing the dollar. They're not, in this sense, I'm not saying the dollar is getting stronger. All fiat currencies devalue over time. That's true. But my point here is that at the end of the day, there's not this massive exodus from the dollar that I think a lot of people are betting on. And you essentially should be relying, I think, if anything, on the ETF here and setting realistic expectations. So those price targets of like $500K, $1 million in this cycle, I would probably dish those out big time and really listen to people who are giving you more data-driven approaches to where these things can really go. I wanted to talk a little bit about the ETF inflows as well, because overall, this is something that, again, I think overall, as we talked about back in kind of, during late January when we touched the 100-day moving average on Bitcoin, right? This is definitely a changing dynamic here. When we started to get those double-digit thousand BTC purchases every week, going from 18,000 to 26,000, right? There's multiple days where we were seeing green inflows. We had signified that there was a changing dynamic here, guys, that the ETF was resilient. It had its initial kind of flush down in week 3, and since then it's just been generally a green ladder. With a lot of the increased GBTC outflows here, the big thing that I really want to see is that we're able to get back on this trend here. Because for anyone telling you that you don't need the ETF, again, a lot of people say, oh, the ETF is a big deal, and then the week or two that it doesn't do well, people start kind of, pivoting a little bit. They start going, oh, GBTC doesn't matter because, look, Fidelity or BlackRock bought this amount, but if they don't look at the net overall inflows as they're ignoring it, then they don't see the picture, which is that overall there's still a net outflow, right? So my point here is that, we can see we had a net 13.5K BTC outflow in week 11, but that's been recovered here by a week of around 12,000 BTC, and that's great to see that people are buying the dip through this institutional on-ramp to the ETF. But the main point here I want to drive here, guys, it's not to say that it is going to or it isn't. It's something for you to keep on your radar. We need to see this continue churning higher. This number needs to continue climbing up, and it needs to be nearly as aggressive as it was back here between weeks 4 to week 10. Because as Bitcoin moves higher here, it is going to demand more and more liquidity. And that's a big point here, again, just to kind of bring it back to this chart. In order to make this move from the December 2017 high to the April 2021 highs, or November 2021 highs, it's basically the same thing when you adjust it for liquidity, interestingly enough, the main point here I'm emphasizing is that you need more and more liquidity as things move higher. Market capitalization gets bigger, valuation premiums get bigger and bigger, and it's much more difficult to make those same kind of multiples, right? So I think this is the really the optimistic scenario that we're kind of in this ascending channel against liquidity, and from there we could set on a peak and maybe build this prior high range around kind of 60, 70K here later down in 2025 and 2026. It's kind of a new base range of support. That might be a way that it plays out over the next couple of years. I'm not going to try to be a Nostradamus and tell you guys how that's going to play out. We got a long ways to go before we get there. But generally speaking, the ETF, global liquidity, all these have major significance. Now, we talked a lot about Bitcoin here, and I think kind of the optimistic price target. The next thing I want to go ahead and talk about here is altcoins. And then after we discuss altcoins, I want to kind of bring it back in and talk a little bit about what we can really watch for in price that's going to give us those key signs that, everything's kind of, the lights are going off, the punch bowl is spilled, the party's over, right? Generally speaking, knowing when the show is over. First, I want to talk about altcoins though, because this is where real returns can be made, guys, even later into the cycle, right? It doesn't matter if you've been all in cash right now, if you've been trading like us for the past few months in some altcoin positions, for those who have been accumulating back in 2022, altcoins are where a lot of people can make sizable returns if you're betting on the right narratives in the right places. Now, one piece of advice I want to let you guys know about is that on Wednesday, 6 a.m. So basically on my next upload, I'm going to be doing a top altcoin narratives video. I'm going to be covering not a whole range of different projects, but key narratives that I think you should focus on. Some of them you may already be familiar with, some of them are new. It doesn't really matter if they're new or it's something you maybe heard of before. The key thing is we want to focus on the things that are going to be bringing the best returns and still have upside potential and are showcasing those early stage signs of strong momentum for a broader altcoin cycle move. Because right now is the time to start preparing, guys. We are at the same level we were at in January of 2021 on the altcoin season index. I want to specify here that I'm looking at the year figure. The normal altcoin season index or the monthly figure is really too volatile here. It's not going to give you much valuable insight, the one that's going to help you to determine those bigger moves here, as we can see May of 2021, here in September 2020, and even here in December and November 2021. That's when altcoins and peak mania really reached. So if you're not looking at that annualized figure, it's not going to give you the most accurate reading, in my opinion. So taking a look here, right, we've just kind of kicked off. We've got that signal here. We've got a lot of emerging players in narratives where their BTC comparative performance is doing great. So this is why, again, we've emphasized the idea that the altcoin cycle has yet to play out. We can see here that we're just barely where we were in others' dominance. These are all the other plays other than Bitcoin, and also outside of the top 10 cryptocurrencies by market dominance. You can see that they currently hold about 13% of the market, which is not only where we were back in December 2023, so we haven't even broken above that just yet. But beyond that as well, we can see back during the prior cycle in January 2022 that we were up near around 19%. So we've got a long ways to go here, guys. And in this additional couple percentage points that we're going to be able to gain on this market dominance, potentially even setting a new highs and maybe even going as high as to double against current dominance holding for other cryptocurrencies as new market narratives take shape. The key thing I want you guys to keep in mind here is that this is where a lot of these small mid-cap plays, again, finding those hidden gems, are going to bring the massive returns. And you're not going to always want to be focused on, just kind of stale legacy plays. There will obviously be some plays where you can make 50, 100% returns, which obviously is great for a short period of time, but there will be some that do 2, 5, 10, 20, 50x's from here on out. I know that sounds crazy, but if we really do have a full swing where Bitcoin goes up to those higher levels, a 6-digit plus figure, and it's probably not going to do it in a straight line, but over the course of multiple months or so, then you can have that opportunity here for altcoins to make a lot of money. Now, again, I want to emphasize this here with heeding with caution. We come here to the data science models. So far, everything looks generally good. And we are not really seeing any overheated readings here on the 200-week moving average heat map here. In most cycles, we at a minimum got a green reading here, as we've emphasized before. Markets of scale, or the kind of multiples you can expect in a cycle, are getting weaker and weaker with each cycle, right? So you're not getting those red dots back in 2021. So I don't expect this to get, a lot of red or orange dots. I don't expect it to be green for very long. When we start seeing that kind of overheated reading, or essentially the monthly percentage increase from the 200-week moving average, then I'll potentially get a little bit concerned. When we're potentially seeing those signs being overheated here in the market. But when I take a look at the MVRV-Z score, even though as of the last couple of cycles we've seen lower readings, we are far away from what we've seen here in the MVRV-Z score. Say that a couple of times after talking for about 15-20 minutes. But again, this is another historic data science model here that's measuring between realized cap and as well the existing market cap of Bitcoin, which measures, generally speaking, the realized, the market cap value versus realized value, and the kind of spread or dynamic between these two. Net unrealized profit or loss, we can see here, up here in the belief denial stage. While that may seem like it's overextended, we've seen in prior cycles that we spend a lot of time up here before things really start to head south. So that's not only great news for Bitcoin, but it's also probably good news for altcoins as well. And last but not least, we have the R-HODL ratio, which looks probably the most extended according to history versus the other indicators. We can see that there's been clear lower highs here in the R-HODL ratio. But again, just keep this in mind here, that this is one of many data science models, right? So I would say, again, the majority of data science models show that we still got some room to go. Now that we're at the all-time highs, there's more conviction behind it as well. So keep that in mind here. Keep these models. These are all free. You can get access to them at lookintobitcoin.com. They're not sponsoring the video. They're just really cool data science tool. But the key thing here, I want to kind of bring it back here too, guys, is, so we've taken a look at the data science models. Data science models show we've got some room to go. Price action alone, we're back towards the all-time highs. Historically speaking, I think I've shared my story with you guys before here on the channel. When you get back to previous all-time highs, that's usually your sign for the beginning of next wave. How high it's going to go, that's the next big question. And outside of that as well, we've talked about the ETF inflows, global liquidity, and how those two things could continue to keep Bitcoin afloat at the moment, but we need to keep an eye on both of them in order to really determine direction, because they are the number one factor that is going to really drive price either direction. We come back here to the ultimate thing you guys need to watch for, And that's what price is telling you, right? You can have still all the ETF inflows in the world. You can have global liquidity looking good. But if Bitcoin isn't holding on those moving averages, and you may be just out of luck, and you may be holding on to an empty bag and empty narratives and endless hopes that, this is just a short-term correction, it's going to keep moving up. There will be tons of people who at the peak will be telling you that Bitcoin's price is going to go to 250K, it's going to go to 500K, it's going to go to this and that, whatever. Right? Even me coming out here today as someone who was generally a little bit more bearish in the past, right? Looking for potential higher levels in price. You guys need to remain skeptical at all times of how high things can really go. They do not go on forever. And as we've seen throughout history, while corrections, both rallies have gotten weaker over time and corrections have gotten weaker historically, it doesn't mean that you can't end up losing your shirt in the process, right? So my point here is to focus on price action above all. And we can see in prior cycles, once we really break the previous, all-time high here, it's very clear to spot how price action, generally speaking, is kind of holding up in a broader cycle. I would say, again, the major thing you want to watch for is moving averages here, like the 21-day. If we're spending a lot of time below the 21-day, and more importantly, that 21-day moving average is starting to act as resistance, and you don't have, for example, any near-term moving averages like the 100-day or 200-day nearby, like it was the case in 2017, and it's probably a good time to start taking some profits. And along the way as well, there's nothing wrong with taking profits along the way and having some cash parked aside that you've decided you're not going to put back into crypto markets, right? So I'm predominantly talking a lot about altcoins here. I know we're looking at Bitcoin's chart, but Bitcoin is kind of the directive driver of trend in crypto markets, right? You can see here again, I'll dive here into the daily so we can see this a little bit clearer, right? We come back here again, we can see every time we come below the 21-day moving average, it gets bought back up. We're able to clear above it. But we can see back here, when we got above the 21-day moving average, instead of expanding price here, we stalled and we snapped below the 100-day moving average, right? Great example here again of how previous ranges of support in the past, right, are now starting to act as resistance or are no longer these foundations for price expansion. We can come back here to 2017. All right, massive parabolic move here. You can feel the energy, the radiance around you. Your grandma's talking about Bitcoin. I know we got some grandmas and grandpas out there in the audience, so I'm not here to judge anyone for being in crypto, depending on their age and stuff. You're a smart cookie if you're already in the market. But the main thing I want to talk about here is that, again, we can see here the dynamic of moving averages. 100-day constantly serving as this buy the dip support on those heavier corrections. I remember when we bought back here in July 2017, covering on the YouTube channel. In September 2017, I think this was the China FUD, or back here maybe it was the China FUD. I know there was the Jamie Dimon, JP Morgan FUD, the China FUD. And again, every single time we dip below that 21-day, in between those general moving average pockets, that's kind of like this perfect little accumulation range. But as we see here, there's more and more chop in that range. And when we got above those moving averages, like the 21-day, where there was more resilience, where price continued and held the moving averages, we faded very quickly. Right? So if you're using those momentum gauges, like the moving averages, that can be a really good helpful gauge. You can also use other things. We have some other custom indicators that we utilize. We use our red and blue momentum indicator that we share within the Dash report, as well as a whole range of the data science metrics that we track as well on the channel. Right? All kinds of different things that you can utilize to kind of spot those trend shifts. But you want to look for ones that have historical relevance overall. The key thing here is this, guys, like overall, if you keep your price expectations steady, if you watch what the data science models are telling you, if you're watching those ETF inflows, if you're watching global liquidity, if you're watching market price action and making sure that, well, as we see here, the 21-day moving average is still generally this range where price is soon to find buyers and drive up valuations higher, then we just keep trading with the trend here, all right? But when that starts to change, when it seems like things are a little overheated, when your taxi driver is talking about his crypto portfolio, when you start hearing about the big headline events, perhaps even Vanguard down the line capitulating and having to offer Bitcoin ETFs, $9 trillion fund manager, some of those things that people are looking forward to, and those news events become reality, that's when you're going to want to start taking positions off the table. And I come here to a close here with talking about Bitcoin because I understand a lot of people will say, But Bitcoin's different, Nick, because 21 million coins, at the end of the day, Bitcoin number goes up, up and to the right. Ultimate, ultrasound money, Michael Saylor, MicroStrategy, BlackRock, yada, yada, just a million different reasons. Guys, at the end of the day, look, if you're convinced of that and you want to just continuously hold Bitcoin, hey, I have to be honest, out of all the positions you could hold just long-term and like set it and forget it in the crypto space, I would definitely pick Bitcoin too. No doubt about that. I have some narratives that really excite me, but I wholeheartedly can agree with that. That being said, don't be so shocked when positions drop 60-70% during that window of time from those prior highs, maybe even more. And perhaps maybe Bitcoin doesn't expand like a lot of people expected it to have another cycle and another cycle as people have expected in the past, as halvings are becoming less and less vital and important around the supply-demand equation of Bitcoin. If we didn't have the ETF this time around, then I don't think you'd be seeing the kind of price appreciation going into the halving event that we're seeing right now. Going from around, I think it's around 900 Bitcoin a day down to 450, definitely is going to be a plus for Bitcoin. But I have a much more important question as someone who's a trader in the market. I'm wondering if there's more market order outflows versus inflows. And in that case, we're talking about thousands upon thousands of Bitcoin per day, tens of thousands of Bitcoin. Now, the ETF has been the changing dynamic there. But when you're talking about thinking really far out into the next cycle, what is that new on-ramp going to be? That's the really big question we got to ask ourselves about. And I think it's a fair one to ask. As someone myself who can admit when I got things wrong in the early part of 2023, I would ask the bulls here to think about that. Those who have been really bullish on this long term. And while they may think Bitcoin is a great asset, what is going to be that next on-ramp here, right? For real price appreciation. And perhaps it's in that scenario of a massive dollar collapse. If you're holding in that case, you already know the narrative there. You've already got the game plan. No need to argue or debate about it, right? So that's it for today's video, guys. I rambled on a good amount here. I want to let you guys know if you enjoyed this video, consider dropping a like. And one thing I want to let you guys know about, one of the projects that we are keeping an eye on here, one of our partners on the channel is a project called D-Gate. Now, I'm very big about security in the cryptocurrency space. At the end of the day, I'm big about securing my funds, making sure that if I'm going to be engaging with anything, I want to make sure if I'm trading or interacting with DeFi activities that my capital is going to be preserved first and foremost, right? So the big thing I wanted to let you guys know about is D-Gate is one of the emerging layer 2 order book dexes in the crypto space. Think Ether Delta, but in this case, a real functioning, smooth, low fee L2 trading platform where you can trade a whole range of different pairs in the market with deep liquidity. If you're trading active cryptocurrencies like Ethereum, if you're trading other meme coins as well that are on the Ethereum blockchain like Floki or Pepe, you can trade a whole range of different cryptocurrencies in this decentralized order book and be able to trade with really sizable liquidity. D-Gate has been picking up massively in volume throughout the months here of March. So I think that it's something to definitely keep on your radar, not just as a place where you can trade in this case, as well as make money through a lot of the strategies built on the platform in order to provide liquidity, but beyond that as well, it's a platform protocol that I think is going to be a big emerging L2 play in the crypto space. It also comes with additional features like DCA here, where essentially you can, in a decentralized fashion, dollar cost average into a lot of different plays. And it's one of the most secure L2s when it comes to decentralized trading due to the fact that its smart contract deployment strategy is much better than a whole range of other different players within the DeFi space that have a whole range of other vulnerabilities and trust factors that you have to rely on when it comes to the team and the developers behind the contracts. If you guys want to dive into some of the documentation, I definitely recommend you do so at the link down below in the description. But you guys can trade using my link down below and give the platform a try. Let me know what you think about it. D-Gate is a really exciting platform. I like that there's a real decentralized exchange with traditional order book functionality that's done in one of the most secure ways possible after all of the issues with FTX and a whole range of other exchanges, even concerns around KuCoin this week. It just seems like centralized exchanges can never get their stuff together, and it's a constant filtering process, weeding out all the bad actors. Why not just go ahead and utilize a real trustless decentralized exchange, which comes jam-packed with all the features that you likely need? Anyways, that's it for today's video, everyone. I rambled on a good amount. Again, if you enjoyed my rambling, consider dropping a like, and I'll see you guys right back here on Wednesday at 6 a.m. Eastern Standard Time for our altcoin narrative video. Take care, everyone.